And hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. And thank you for joining us today here on KCMX. My goodness, Joe, it's September the 1st is our show today, and we've got a terrific topic that we haven't talked much about, and that's the rental housing market, have we?
Yeah, it's been a while,
Yeah.
and certainly there have been some changes. It's been almost a year since we had our guests in-house here, and it's going to be an interesting update for sure.
Well, and sitting next to me here is Danielle Remley, who is the owner of Sterling West Property Management. And, first of all, you own your business there. I love that, and you're doing lots of great things. You were here about a year ago. It's been a while since we've talked.
It has been a while. It's been a long time.
Rental housing market is still out there, still churning away, isn't it? I can't wait to hear it.
Busy.
busy. And Toni Thomson is here, and Toni is the office manager there at Sterling West as well. You've been in the property management business a long time. I didn't realize that, Toni.
Yes, I have. Since about 2012.
Yeah. So you've really seen this thing kind of go like this and go up and down, isn't it? It's where would you say it is today? Up or down, medium?
It's kind of medium.
Yeah, medium.
It's level.
Yeah.
It's leveling.
Well, we always have told, or in all the shows that we've done, how much the rental housing market parallels the regular real estate market, doesn't it? I mean, we've seen that in terms of inventories and pricing and all of that available now. So that's really kind of where we're going to start today. And I can't wait to ask you, last time you were here, rents were crazy. It was no inventory out there. You were crying. You needed 3-bedroom, 2-bath places,
Yes,
and all that kind of thing. So where are we today here as we go into fall and then winter? So tell us, Danielle, where things are right now.
So I would say it's still a good market. A healthy vacancy rate is 5%.
Right.
Ours is around 2.5.
So that really hasn't changed that much, maybe a little bit.
No, yeah.
It's come up.
Right.
This time last year it was under 1.
Right.
So that's where we're at.
Well,
We're almost halfway there.
We've changed, but we're still good. And we're still healthy.
So you go from that. Okay, you more than doubled then from a year ago the available inventory.
Correct.
Right? If it was a 1% vacancy.
Didn't you have 3 units available a year ago when you were here?
Yes, I do remember that conversation, actually.
Yeah. Total
right.
3, and you managed at the time 300?
Around there, yeah. Yep.
Had three vacancies.
Yes.
Yeah.
So today, I think we have about 20 vacancies,
Okay.
and we're around 500 properties.
And you're managing 500 some properties around that's amazing to me. 20, that's still not very many.
No,
I mean, that's not very many.
But what's happened is, I think more inventory has come into the market somehow, one way or another, building, and more investors have come in. And obviously supply and demand rules. There's more inventory. So it's like this time last year, you could almost put any rent price out there that you wanted and somebody was going to rent it.
Yeah.
Today, there's more options. So if you're overpriced, there's a few other options, and the overpriced one's going to sit longer.
Doesn't that sound like the real estate market that we have talked about? It blows me away when you're saying that. I was like, yes, that's really happening. Yeah. Let's talk inventory first. Where has the inventory come from? Jill, I mean, you're the office managers get lots of calls, I'm sure, that kind of thing, but where is the inventory coming from that you're seeing an increase from? Is there particular areas, or is it just across the board?
It's just across the board, I would say. We have some investors that are building. We have a lot of people coming up from California that are purchasing properties and looking to have investments.
I would say a lot of the calls are people who have been landlords in California who are selling their California homes and reinvesting them in Oregon.
So into rental properties,
yes.
Are you saying?
Yep.
We used to call them equity refugees.
Well, yeah, that's
what they were. And they would have enough money to come up and buy their primary residence and another to put their money to work and to be able to, leverage that out. And they have a place to live, and they have a place that's earning income for them.
Well, that's really good to hear, though. So are they? You're purchasing. The biggest demand still is what for what type of properties right now out there?
I would say a 3-bedroom, 2-bath.
Yeah.
That's always going to be the top thing, isn't it?
Yep.
Which again is what they're building, Joe. I mean, when we think about all the things we talk about apartments, all the things that we need. The builders are building 3-2s.
Yep.
Okay, and then that's the number one need of the rental market.
Mm-hmm.
Okay, all right. What else is out there that they're doing?
Well, there's been apartment building. I think there's been people who have had it in the works, because it takes a while. So who've been working through the permits and all the red tape and have finally got their building up.
Okay, yeah. And we have seen a lot of new apartments. Okay,
yeah, so that's bringing in, 16 unit, that's 16 homes. So you get a few of those and it does make a dent.
And our urban growth boundary has expanded and has passed and cleared all the hurdles for Medford. So that's going to free up some more land.
Yeah.
That's in the works. The plans, the developers own the land. It's in the works. It just takes time for that to come on. And just as a side note, we Nathan, who was on our show, the builder, and his wife, who's his real estate.
The Ripsons.
The Ripsons, yeah. Well, he's got his first house done just down the street from me.
Oh, yeah.
On Peach Street. And then also just off of Kings Highway between Kings and Garfield, there's a huge new subdivision going in. They've been laying sewer pipe and all kinds of things across Garfield there. So that looks like at least 20 to 30 homes maybe in that subdivision alone. So you can see the inventory and the work going on all around us.
I wonder if those are. I wonder how many of those would be rentals. But it sounds like that's happening. A lot. Some of the new construction,
some new opportunities,
is in fact being consumed as rental properties.
Yep.
Wow. Well, I think that's good.
It's very positive.
I think that's a good thing. Well, you see, I know Joe sees. He goes to all the government meetings around through his work. Are you seeing?
My duty.
I mean, we have seen a lot of more rental properties. I mean, apartment complexes available, condos. Are there not much of that? There's not a lot of that going on, is there?
I almost wish we had Frank Mania here from Type for Title, because he would be snooping out all of the multi-unit dwellings that are in the works and would.
Well, do you see a lot of them coming through the planning departments?
Not an overwhelming amount, but a steady. There's steadily new subdivisions, new commercial opportunities come before the Medford Planning Commission all the time, and
people are
steady flow of traffic.
I see people building duplexes. I see lots of kind of that activity. Up to 4. You could take 4 properties and you can get those FHAs, or you can get lots of good things by 4. If you go above 4, then you're in.
Right.
We just had that conversation with one of our clients today. He's looking at a 4-plex.
Explain that then, just what I was trying to say, because you can say it better.
Well, this particular guy is one of the guys who just got the apartment complex going.
Okay.
And he said that same thing, we were talking about cap rate. He said that to make
building them today,
to make an apartment complex actually pencil is pretty hard, because all the fees and all the everything is so expensive,
and construction costs have really gone up. So that's really making that's not helping the cap rates.
No, it's not.
Is not at all.
It's not.
So they're looking at it at that rate. Okay.
So he got that going, and it's working out for him. It's great, but he's now looking to invest some more, and he's not going to do another apartment complex. He's going to do a 4-plex.
Right.
Interesting.
See, I would do the 4-plex too. Hey, it's a heck of a lot easier.
Yeah, it's a lot less red tape.
And the city of Medford and other municipalities in the state and around us are looking at delayed systems development charges, so that you can actually get your building done, get some people moved in before you have to pay some of those SDCs.
That's great.
Yeah. So the City Council of Medford has already given their blessing to that. They worked it through the Planning Commission, and it's an incentive to get people building and creating the inventory that we need, both residential and commercial opportunities there, and give them a chance on such tight margins to be able to make it work and get it on the market before they have to pay those.
Okay, now another area that I see, that's happening are additional dwelling units. Now we're seeing Ashland, we're seeing all communities now are allowing or easing their restrictions. I was going to say stupid restrictions, but easing their restrictions on being able to develop an additional unit on your property, right?
Yeah.
Do you see that in the future of the rental housing market helping or being able? You think people would you take those types of units on, or tell me where you think the ADU issue is going to go or is going?
If it's done right, it's a great way to open up some more housing. The challenge we have when we get those kind of units is that they're not separately metered.
Not separately metered, okay.
Or separate addresses.
Or addresses.
Because how do you rent to 2 different people who are sharing the same utilities and the same mailbox?
Well, the cities. That's a good question. That's a good question for the cities, because I didn't even think of those when they talk about these ADUs. All right, because in Ashland you're supposed to be able to sell those little pieces of land off, you know, too, which would have its own.
Then if it's done right, yeah.
I see what you're. Okay, all right.
But we ran into trouble. We did a situation like that wasn't separately metered and didn't have a separate mailbox, and didn't put enough exclusions in our lease agreement. So both parties rented at 1, 2, 3, whatever street, which really gave them both access to everything there.
Yeah. Oh.
Both houses.
Wow.
Both houses.
Both houses.
Both sheds.
Yeah.
You know what I mean? Like somebody was supposed to have a garage, somebody was supposed to have a shed.
Yeah.
And it was a nightmare, let me tell you.
Probably probably cozier than the primary residents wanted it.
Right?
Yeah, that would be. Well, I certainly do hope that as we go through this, that the governments are going to get their act together with this.
Yeah.
And it would be, again, it's going to be something for the property management companies. It's a new market for them opening up, I think, in this, because they're going to see these. The demand for it is too great for single living, for small properties, and not the 3 and 2s that, it's just so interesting.
I think of my own situation with grandkids who get ready to go to their first year of college and want to stay here at RCC, but it's a great situation for them for very affordable rent. They're so close to home. Yep. We still get a little privacy from grandparents as well.
Yeah. Well, I see it happening. I see it changing there. So, so the market is usually 2.5% in vacancy rates. And how are you? Are you still lots of people? The demand is it still far greater in terms of the supply, or when they come into your offices? Tell me what you're doing there. How are you handling those things then, Toni?
When they come into our office looking for, 3-bedroom, 2-bath, we just advise them to keep an eye on our website, because we are first come, first serve, meaning first paid application. Okay. And those places that we put on our website, they have like 5 applications on them right away.
It's still really fast.
We can put one up today, and by tomorrow morning, we're going to have 5 applications on it.
You would have 5. And how do you determine? This is why you're the professionals here, Joe. How do you determine those 5 people of who gets that place? How do you go through that?
So the way we do it is we will do a group showing, and the first applicant, they will say, yes, please proceed with our application. We will process their application. That takes anywhere from 3 to 5 days. Okay. If they qualify and we want to approve,
so you're going by first in kind
Absolutely.
of thing. That's how you determine that fairness. You have to be fair. I mean, you got to be fair with that.
And I've got to say, when the inventory was tight, prices were high. We heard some real agonizing stories of renters that were making fees over and over and could never get into a place. But it eroded their first and last months that they had saved up to be able to get into places.
Because landlords were just jacking up the rents too.
So we're never taking applications with fees, and they knew they weren't going to be able to rent.
We got a break coming up here. When we come back, I do want to talk some more about getting ready. What do you got to do to be able to get a property here, and the standards that you look for, and the kinds of things. Why do I want to work with a property manager or do it myself? That's the biggest question. Yeah. No way, don't you ever do it yourself. We got a break coming up here. The Real Estate Show here on KCMX continues right after this. And welcome back to the Real Estate Show here on KCMX News Media 880. Pete and Joe, the Real Estate Guys, with you. Thank you for joining us today. Next week here on our show, Jessica Gomez and Jeff Golden, the 2 candidates for the Alan DeBoer State Senate seat. We'll be here talking real estate with both of them. And after last week's show with the sheriff in here, Joe, we were talking about cannabis. Hey, we're talking about rental properties with cannabis. We got to talk about that here. But anyway, there's great information on some of those shows, so go back and watch them if you would there at realestateshowOregon.com is the website. Those are on YouTube. So again, today here on the show, Danielle Remley and Toni Thomson from
Quit
Sterling
calling
West.
her Jill.
That's 3. You know why?
That's 3.
It is 3.
I'm counting.
Toni.
You know who Jill is?
I do.
She works at First American Title. So she's been here.
Yes, she has. Too many guests.
Too many people. Toni Thomson and Danielle Remley. Anyway, so we're talking the rental housing market here today on the Real Estate Show. Again, when you were here a year ago, rents were going crazy. You were right, Joe, before that last segment ended, about people were just so upset over rental increases and landlords. And there was like a big conflict was coming. How has that gone, Danielle? Now, what are rents like today as we go into the fall of 2018?
Rents are leveling off.
Okay.
So I am more conservative when I give a rent price than I was this time last year.
Okay.
Because I'm already fighting against, my clients are coming in and they're thinking they have a number in their head based on what it's been the last 3 summers.
Sure.
And it's just not happening anymore.
They're like sellers of real estate.
There are sellers
who want the high prices and not realizing the market has in fact changed.
And how fast it can change.
Yeah.
And it's changed fast.
Over months.
So you were really seeing some pretty good rent increases, right? And people would leave, and people were I don't know if they were being booted out, not by you guys or whatever, but people were changing properties and everything, wasn't it? It was a really bad time, I thought.
I think that's changed a little bit.
You think that's changed? Okay, how are you in price? 3-bedroom, 2-bath. I mean, generally, it's hard to do that, but what are they generally kind of going for today? Isn't that the favorite question? I know.
Under 1,500 square feet.
Yeah, okay. 3 and 2, kind of thing.
In the $1,500 range, probably, depending on where it's at, of course.
And the rental market in Ashland, what's happened there? I mean, I know you get higher prices for that.
Well, you know what? What's interesting about Ashland and all of the higher priced ones in general, those are my biggest culprits. I mean, those are the ones that I'm having to lower.
Yeah.
We have a 3.2 in Ashland that we were getting about $1,750 for. Tenants moved out, and it's been sitting. We haven't had any activity on it.
Wow.
Really?
We're having to lower the price.
Yeah.
Well, that may parallel the luxury housing market in some ways, which has a 2-year supply of inventory out there, and prices of the $1 million, $900,000 and above are not. They're not getting those.
Yeah. Right.
So the same thing happening in the rental market in that type of that price range.
Right.
Wow. Most popular price. I mean, what do most people can afford today? I mean, when you talk to people, is there a general? Is that 1,500 range? Can they hit that range?
That was one of our big concerns a year ago too. Was where are these people going to live if the affordability got pressed or tighter?
Right. Or if the rents got so much or something, it's cheaper to buy a house.
For quite a while.
We're back to that again.
Yeah.
That's such a fine line
It really is
to draw there, isn't it?
Yes, it is.
Well, why does someone? I get into so many conversations with clients about rentals and what do you do with them, or I have this or that. And should I manage it myself? I'm sure you get lots of conversations about that. And really, it's like any kind of professional thing. If you want to do something, why do you want to do something yourself when you don't know what you're doing, unless you really are committed to it, right?
Absolutely.
And you know people who are committed and do their own, right?
Sure. Yeah.
Yeah. But most of us do not want to do that.
The problem is that the laws are so gray. I mean, the landlord-tenant laws are very specific, and I said they're specific and they're gray at the same time, and they are, which is ridiculous.
And ever changing.
They really are, and they change all the time, and that would be the number one reason not to manage your own property, because unless you're going to take all the classes and you're going to be educated and you're going to be signed up for all the newsletters and all the stuff, you're not going to know. You're going to make a mistake. We make mistakes, and we're professionals who sleep, eat, and breathe it, know. And you make a tiny mistake, it's huge. It's enormous.
From your experiences, are renters, they're knowledgeable of the rules,
Absolutely.
right?
Oh, yes.
Is that correct?
Oh, yes.
Absolutely.
So when they come into your office, I mean, you can't really kind of BS them or anything because they know what
they absolutely know.
They know this.
Yes.
So if you trying to rent it and you don't know that or whatever, you can get.
If the renter is smarter than you, don't do it yourself.
Unless you just want to open that can of worms.
Yeah. Well, I don't want to do that. I think it's still a good investment. I mean, the thing is that so many people go through is a rental property still a good investment? So many people say, well, I'm going to turn mine into a vacation rental if it's possible, or this or that. And we still need the rental housing, right? I mean, so that's not going to change. And I don't think, is that slowed? Have you seen that? Because for a while, everybody wants a vacation rental. Right. Is that we're taking them out of the inventory? Remember that kind of thing? Is that you don't see that? That's not a big issue.
I don't see too many.
No, I still think that people still see the value in investing in real estate and in rentals. The prices haven't changed so much that it's not making sense for them. It's just that they've had their heads filled with these huge numbers because that's what's been happening.
As we talk about them,
and they are just having a hard time coming around to the reality of, it's got to be a more reasonable number, which is really good for our community and our valley. I mean, having your housing costs higher than 50% of what you make is not healthy for anybody.
And we're seeing price reductions. We're seeing pretty aggressive price reductions right now for the people that missed their mark and were a little too high. They're coming to find the market, and I just see that in the emails every day from all the different agencies of listing agents out there trying to let folks know, hey, we're coming around.
Yeah,
we're getting it. Yeah.
Well, Danielle's husband, Jim Remley, who is the managing principal broker at John L. Scott, a few weeks ago at one of our office meetings, he showed a slide, and we talked about this, where it said they looked up all the state. Jackson County, the renters in Jackson County paid an average of 39%. Was it 36 or 39% of their income for rentals, and the state average was 24. That's what was so interesting about that. We are paying more than that. And I don't know how that's changed in the last few months, but that seemed to be a tremendously high amount of a person's income going to a rental property.
It's unsustainable.
It is unsustainable.
But you can't get sick. You can't have your car break down or an appliance break down. There's it's a razor thin margin.
But what all three of you are saying is that the rental that has slowed down.
I think we're just at the beginning of that slowdown. I don't know even, to be honest, that all the property managers in the valley have gotten that memo. I live with Jim, so I probably get the information a little sooner than everybody else. But
you probably get it at midnight. It pops up in the middle of the night.
You got it. But I think we're just at that point. And Sterling West is getting ahead of it. And being conservative with our prices and our what's happening, trying to get everybody to understand that things are changing. You might even still get it. You still might get that high rent this time. Let's throw it out there and see, but don't get used to it.
Do you find that to get the higher rents, in a place, that the properties need to be beautiful and ready to move in, like we do with selling real estate? If it's not ready to move in, they don't want it. They don't want to pay the price for it. Does the rental market go along that way too, do you think, or not?
Yeah, in a sense. The higher priced properties, yes, they want them to be in pristine condition.
I want them nice, right?
Absolutely. Especially if you're going to pay $2,200-$2,300 for a rental. Those properties, we always make sure that they're in pretty pristine condition.
Some of the other ones, the more moderately priced ones, it's a different story, and especially anything that's $1,000 or less. Most people will just take them regardless because it's so hard to find that price.
They're just so hard to find.
So they'll take it and they'll deal with the construction around them.
And I kind of think some of our inventory, we've had houses that were lingering and languishing. They've snapped up pretty well. So I think we're seeing the outcome of some of those. They've had their 6 or 8 months to refurbish them and get them in shape, and that's really helping our effort, and helping find places for people to look at.
Well, there's lots of activity going on. I just showed a property the other day to a fella, and it was the first day on the market. First day, $130,000. Walked in. This is we don't want to make an offer. I called the listing agent. She had, seriously, one day, she had 9 offers. She said, if you don't come in with cash and way above it, don't even bother. We didn't bother because we're not going to compete with that.
Right.
That's out there, and this is going to be. I'm sure this is probably going to be an investment property and going to be a rental somewhere.
That's what cash tells us on.
That's the difference of the cash. I mean, you don't have. If you're getting a loan, we said yes. You said don't even bother. So it's kind of those kind of situations that are still out there. They're not everywhere, but in certain price ranges, and certainly whether it's a rental market or the housing market, it's still there.
Absolutely.
And I've got clients patiently waiting. They're up to 175, 185, 190 right in there, but they want just a little bit of room around their house. 2/3 of an acre would be great. This is White City, and we've been looking. There's not a whisper out there of something with just a little bit, even a half an acre would be great.
Well, that's
everything close to the criteria is 240, 225, 240 and above. Yeah. So it's really,
you're describing the ideal retirement property right there. I want a half an acre. I want an acre kind of things. Well, I wish we had all those out there. It's not that way. We got to just going up there. Do you find that the owners of these places, of your clients who own properties, they got to take care of them? That's their responsibility, right?
Right.
Yes.
How is that going? I mean, do they generally, landlords are taking care of their properties today, would you say, or tell me where that's going?
Most of them, yes. Do we have a few that are a little bit harder to talk to about? Yes. The majority of our owners are really good, and anytime we call with a repair that's needed, they're right on it.
Because you follow that and you take care of those properties and tell them this stuff, right? I mean,
Absolutely.
what's going on and all that.
We handle all the maintenance on all the
We
properties.
do inspections twice a year, so we're catching the problems. And, Sterling West, it's funny because I just had this conversation with an agent today that it's a misconception that a property management company will just take any property that you want to give them. I mean, he looked at me like, what do you mean you wouldn't want to take it? We don't just take any property.
No.
It's really about the owner. Do we work well with the owner?
Right.
Is it a reasonable owner who is going to be a reasonable landlord?
Sure.
If he's not going to allow us to provide a habitable house, then we're not interested.
You don't want it. That's like having a listing. I mean, if you can't sell it, you're not going to be able to sell it. Why take it?
Exactly.
In many ways, you'd say, well, things like this, but works the same way, doesn't
Absolutely.
it? You really want to weed out. You don't want. It's just a big hassle for you as the owners, or the hassle for an agent if that
Absolutely.
happens, isn't it? Yeah, see, we're getting better at that. We don't want that anymore, huh?
Yeah.
As we age,
Knowledge is power.
As we age, we just don't want less. We want less hassles and just kind of
smooth transactions.
Make it nice.
Smooth
We want
operation.
everybody to get along. Okay, it's okay. This last week, I've been dealing with a transaction with clients, and we're going crazy over a hot tub. Let me tell you,
I've heard his end of it.
It's going to make a chapter.
3-4 days.
It's going to make a chapter in my book. I swear to God.
is.
We got one more break to go. We're talking rental property today with Danielle Remley and Toni Thomson from Sterling West Property Management. We're coming right back to the Real Estate Show right after this. Real Estate Show continues here on KCMX today. Pete Belcaster and Joe Brett with you today. Don't forget you can check out any of our past shows at realestateshowOregon.com. And Joe, we really had some amazing shows.
Good lineup on
this
there.
summer. It's been really a lot.
Yeah.
We've learned a lot from fair housing to estate planning.
I could tell you've had a little time on your hands because you're producing some pretty good shows and bringing us some good guests every week.
Well, the real estate market, as it changes, and we're all talking about that rental markets and how they're so parallel. That was something I guess I never really expected when we started these. Where the rental housing market and the regular real estate market in different price ranges. We've said today the luxury market. How they parallel. It's really interesting today. And is it still a good investment? Is it still good to own a rental property? And the answer comes back, yeah, it is. I mean, we talk about creating wealth. I mean, you've seen probably many of your clients. You create wealth with real estate. It's the number one investment, not stocks, not bonds. It's this.
It is.
And what you do is create that avenue for people, do you see first-time investors coming to you, talking to you, Danielle, about some of this stuff, or is that they've already got that already done by the time they get to you?
Oh no, we definitely see that they come asking for advice. We're constantly giving kind of rental quotes so they can make the right decision on 3 or 4 properties that they're looking at. And
they want a cap rate, right? I mean, they want a return on investment. Of course. What do you suggest is a good one or a fair rate of return when you talk with investors like that?
7% is usually what everyone's looking for.
7%.
Really hard to find in this market.
I was gonna say,
it's more like 5% in this market.
Wow, yeah.
If you could get 7%, that's really good in a market like this. You're not getting that anywhere else. Yes. But it's hard.
It's hard.
Years ago, it was around 8. It was somewhere up there.
8, 9 cap rates. Yeah. So 5. I mean, I can sure
5's
see
probably reasonable.
Even see some less than that to start, whatever. But it's right around that rate there. Okay. Well, That's still a good. I mean,
it's great.
Put it in your bank today and tell me what you're getting, and then you're going to see if you get 0.01.
And you're creating equity as you take that 5%. It's a lesser margin, but you're paying yourself on the other end as well all the time.
And you're getting your tax benefits, and I mean, there's a lot of other things to factor in. You know,
you run it like a business. You know, and all those things, and that's, you know, the laws of this country are for small businesses, and a rental property management. Having a rental property is in fact that.
I think that's probably the most important thing for people to kind of understand is that it is a business. It's income, it's expenses, unless you don't have another job and this is what you want to do. That's why you have a property management company be involved and run it for you like a business.
And when Glenn Cunningham joined us, our CPA, a couple of months ago, he talked about if you buy now, you get to the new tax law. You can I don't say write that off, but you have the deductibility like immediately. You don't wait. You don't have to wait years.
That's true. Yeah.
You get to do it now, which is a huge advantage for potential investors who want in some rental properties. I think, what a deal.
Pete has said since the first show we've ever done that real estate brokers are allowed to have a license to be a property manager as well. But why in the world would you want to? And it's the words of wisdom. I mean, really true. And think of if you're the investor, you're the property owner, just the screening of the clients. That's the one thing where I would get right off the bus and just have your professional people take care of that, because that's another element too of finding the right people to protect your investment and get the right renters in there too, and that's a job unto itself and takes some expertise and some intuition, I think, of that experience.
Well, they've already screened them. I mean, you have already applications on your desk, and you take the top ones. You've already screened them. You're just waiting for properties to come up that they can fulfill.
Yeah,
which is great.
Right.
Is that right?
Well, it's a little different.
It's a little bit different than that. We advertise and then they put in their application.
Okay. So, you advertise it out there and then okay. All right. Well, that's fine there.
But the screening process is a very important piece.
Boy,
very.
Well, and generally speaking, and one of the other questions always comes up when you talk, well, how much does this cost me? In general, just give me because you got to be paid for what you do. I mean, it's just like everything. So tell me, what's a reasonable commission, or is that the word you use for that in the business?
It's funny because I've done a lot of studying, on my competition, of course, and really everybody in the Valley is pretty much getting 10% of the rent.
10%.
Then now everybody has a different package. Some people say, it's 8%, and then there's a vacancy fee or a turnover fee.
Okay.
Some people say it's a flat fee, so you're paying all year long. We're all making about the same amount of money. It's about 10% of the rent.
Because it's a supply and demand market. You just can't go off on your own doing whatever you want, right?
Yeah.
You got to do it together. I mean, that makes sense. Yeah. Okay.
So. But, that sounds big to people. I think my biggest challenge when I'm bringing on new owners is to them, that's like, whoa, you're going to take that much. But for everything that we do, to pocket $150 a month is really not that much.
Yeah. Well, here's the deal, okay? Say the rent, whatever it comes to. With someone, if someone said to you, say she's managing this for me, and I say, okay, I'm going to pay you $10, and I'm going to keep 90 of that $100. Would you do that?
No, thank you.
Yes, you would. You would do that in a heartbeat. Why wouldn't people do that? It just seems to me they're doing all the work. It's the smartest.
It's the cost of doing
business.
It's
the smartest thing you.
Exactly.
It's the smartest thing you can do. It's interesting to hear you and how it's changed. I love that.
Can we negotiate? Real estate commissions are negotiable.
I don't negotiate. We're too good.
Jim's gonna love that answer.
Money, for sure.
That's what he teaches us.
I wouldn't negotiate that either.
No, we earn it. Trust it.
We
really do.
You can't. You need to do that there. Yeah. Well, we only got a couple of minutes left here, and so the rest of this year. So you're predicting what then, Danielle? When we talk next time, what do you think?
I think that things will stay steady. I think that rents aren't going to climb. I don't think they're going to decline a lot more on the luxury properties. They're going to come down. Your middle of the road places, those 3-bedroom, 2-bath. We're just level. We're in the 15, maybe 17, that kind of range. I think it will stay that way all the way through the rest of this year. Probably this time next summer,
Who
I don't know. We'll see.
What generally happens during the fall and winter months in the rental market? Does it change much from the summer that we've had, or is it still just steady as it goes?
You know, we used to say that come October it starts slowing down.
It's
Nope.
never
Nope.
that we said that 5 years ago.
Yeah.
Wow.
Nope.
We keep waiting for our October.
That's when we want to get our busy work
You
done.
don't. You really don't see a down. I mean,
Not
downturn
really.
with,
Not really.
Isn't that? It's interesting.
The most distressing information was that cost of rent per your cost of what your income is up in the 30s like that's not sustainable in our valley. And the problem is we don't see the jobs on the horizon
Exactly.
coming to kind of help us close that gap. So that's something we're going to have to keep an eye on
It's
in
really
the
sad
program.
for these families.
Yeah, it's a big burden, and it leaves you very little for anything else.
For anything.
Our affordability index in Jackson County for rental market and the housing market is below that 100 mark, and it's been less affordable now month after month for the last 3 or 4 months now. So we're seeing that all over the place. You have 20 properties about available out of 500 that you manage. That's amazing. How can someone get a hold of you, or what should they do to kind of start that process if they need if they need your help?
I would say to visit our website. All of our available rentals are online.
Sterling West Properties, Sterling West
Rentals.com.
SterlingWestRentals.com. Okay.
So, and if they find a property that they might be interested in, give us a call. We'll let you know if there's any apps on it.
Yeah. Okay. Well, thank you guys for coming in. It's great
Good show.
Thank you.
What an update, man!
Yeah.
It's changed. You're working hard and you're successful, and there's a lot going on in the rental market. Investors or
your business
renters,
is growing,
give
your
them
economy
a
is
call.
growing. Yeah.
And don't
Good
do
signs
it.
there.
Don't do it yourself. Get some advice, and Danielle, I know, would really be happy to help you. That'll do it for the Real Estate Show today here on KCMX. Don't forget, next week, Jessica Gomez and Jeff Golden will be here. We're going to talk real estate with our state Senate candidates. It'll be a fun show. We hope you'll join us. In the meantime, have a great week, everybody. God bless you all, and we'll talk to you next Saturday right back here on the Real Estate Show.